Welcome to the Property Buyer Podcast, where we explore the world of residential and commercial real estate to help you make better decisions about buying, selling, or investing in all types of property. Join me, Rich Harvey, CEO of Propertybuyer.com.au and multi-award-winning buyer's advocate. Our podcast features expert interviews, market trends and insights, and practical tips for navigating the complex world of Australian real estate. Whether you're a home buyer, a seasoned property investor, commercial buyer, developer, or simply curious about the property market, our podcast is for you. Join us as we share our knowledge, strategies and experience and help you achieve your property goals.
Welcome to another edition of the Property Buyer Podcast. Today's guest is Tim Reardon, one of Australia's leading voices on housing supply and the construction sector. Tim is the Chief Economist of the HIA, the Housing Industry Association, where he closely tracks building approvals, construction activity, labour shortages, and the economic forces shaping Australia's pipeline. His work provides a front row view into the housing challenges that we're currently facing and the industry and the realities behind our current shortage. In this conversation, we're going to explore what the data is really telling us about the supply of new homes and why so many projects are struggling to get off the ground, and what this means for house prices, for rents and affordability in the years ahead. Tim, very special welcome to the Property Buyer Podcast.
Oh, thanks very much for having me. Look, I explain my job just a little bit differently. I say that I just travel around the country talking to builders and telling them stories about what the data is telling us. And it's, to be honest with you, one of the easier jobs I've ever had.
Yeah, love it. Fantastic. Tim, we have a little tradition on our podcast where I'm going to throw you a thought of the day. And today's thought of the day is from a guy called Kevin Kruse. And he says that life is about making an impact, not making an income. What do you take from that quote?
Oh, look, that is, life is about making an impact and not making income. I think that until you've made an income, it's very hard to make an impact. Oh, gosh. I didn't expect to go so philosophical.
Well, I didn't expect that one, did you? Hey?
No. So, look, I think that when people start to identify themselves through their work, and then they start to, I've seen a couple of colleagues retire in recent years, and I'm not too far away from an age where my friends are doing the same. And I get concerned when they start looking at what their impact is and what their legacy is going to be. So yeah. I think that there are only a few people in our lives that we can genuinely have an impact on, and that's probably 3 to 5 people. And I think that focusing on the impact that you have on that small handful of people is that's the right focus for impact. In terms of income, no, you've got to have an income to sustain yourself to do the things that do then have an impact.
Yeah, love it. So having the impact on your family, love it. So Tim, let's get into the data. But before we do, I'd just love to maybe ask a question. What sort of sparked your interest to become an economist in this field of the property industry? Like, why did you sort of want to become that?
Well, I left school in 1991 during the recession we had to have, and it did deeply scar me. And I had went overseas for a couple of years after that. And economics was something that had deeply fascinated me. So I'd say the honest answer was I went into economics in order to better understand why we needed to have that recession. Of course, out of that, I learned that we didn't need to have that recession. It was an entirely unnecessary cycle. I think for me, though, I did exit economics for most of my working career, and more accurately described as a lobbyist, represented the automotive industry, the electricity industry, particularly the coal-fired power stations, all of the bad people in Canberra over the course of the past 25 years. And it came back to HIA after a 15-year absence to do economics. And then the pandemic happened, and it made it just a lot of fun. And I'll say that I'm now 2 weeks into an 8-week circle around the country.
Very good.
It's quite interesting to talk to builders, find out what challenges they're facing, what they're seeing, and then compare that to the data we're getting.
Okay. So from your travelling around Australia, from your vantage point, seeing things at the coalface, how would you describe the current state of Australia's housing construction sector?
So we're back in a cycle now where every market is operating differently. And I'm in Perth today, and this is a market that's constrained only by labour. If we go to Queensland, they've seen an enormous increase in population, particularly in southeast Queensland. And now North Queensland is seeing people move further north. The same dynamic that's hit SEQ is now Townsville's 50% above the volume of home building that they would sustain in an average year. Sydney and Melbourne, on the other hand, are markets that are really battling to come out of the bottom of the pandemic cycle, really battling against a couple of strong headwinds. And so there is that overarching dynamic that I can see. But then within each market, Perth, there's just a couple of builders here that really dominate the market, and the market operates. The industry here operates very differently to Queensland, where there is a very large number of medium-sized businesses. So I think at the moment it's quite interesting for the fact of the pluralistic nature of the market.
Okay. There's a lot of, data, so a lot of commentary and speculation about just how far short we're going to fall. But what does the data actually say about the supply pipeline right now? Are we starting to build more? Are we starting to get any breakthroughs, or is it pretty sketchy?
So there is some good news. 1.2 million homes, great target. It's like JFK saying we want to put a man on the moon by the end of the decade. It's just the right thing you want. The government's out there laying out an agenda. It's just the same. Chris Minns, the New South Wales Premier, when the local council stood up to him, he had to remind them that they were an active state parliament. We are genuinely now seeing some policy reforms come through that will have an impact. We're almost certainly going to fall at least 1 year behind, or 20% behind on that 1.2 million. But I'm hopeful that by the time we get to 2030, that we will be building at the rate of homes required to build 1.2 million in the following 5 years. If we look at the individual policies, all of the policy decisions have shifted out of local councils and out of state planning departments, and they've moved into state and federal treasury. That doesn't mean that every decision is going to go in the way of increasing housing supply, but EPBC fast tracking at a federal level, state programs of state significance exist now in every state jurisdiction. They've been moved within federal treasury, and we're seeing some decisions come through. The federal government investing in infrastructure, every state government investing in infrastructure. Now, all of those policies are going to take more than 5 years to flow through to lower cost housing on the ground. But that should start to see activity come through before the end of the 5 year cycle. And there's one policy in particular I think that's probably really going to stand out in terms of having an impact on supply, and that is the New South Wales government plan of buying 50% of off-the-plan apartments. And they've announced this policy at a point where we are at a very low cycle of apartment building half the number of apartments in Sydney, Melbourne and Brisbane as to what we did a decade ago. And whilst it isn't going to be eligible for all the apartments built in Sydney, it's going to be very focused in a few locations. What it is going to do is build capacity within the industry at the bottom of the cycle, and will ensure that we don't undershoot over the course of the next 3 years, keeping in mind that high-rise apartments take 3 years to build. And
how many years, you mentioned overshooting, like how many years have we actually overshot? Like how many years have we actually overbuilt in Australia? Because I don't recall that many decades have done that.
Oh, no, we have not overshot at any stage in the past. In fact, I did go back 2016 to 2018 and looked at all the stories that were running about zombie apartment complexes. I don't know if you recall it, where APRA and ASIC were concerned that we're going to build these towers that no one was going to be living in, ignoring the fact that 100% of apartments have to be sold before they turn the first soil. So now I'm referring, probably undershooting would be the right term there. So knowing now that we've got 3 years where we're not going to complete very many apartments, and we just got updated population data today that net overseas migration is back over 300,000 people in the last 12 months. We are not at any stage in the next 5 years going to build enough homes to meet demand in any single year. There probably was a little anomaly. 2019 is probably the year where, in that year, we saw supply of homes equal the growth in demand. And that's when we had seen the impact of Dutton's tightening of migration. And that's when we saw the peak of apartment completions coming online in Sydney, Melbourne, and Brisbane.
Got it. Okay.
And we also saw stable house prices and rental prices. It's quite a surprise for people to see that supply and demand equates to house price outcomes.
So I'd like to talk about sort of population growth and household formation compared with how many houses we're building. So we've got, big migration coming in. We've got household formation. How big is the gap between, continuing household formation and dwelling completion? Is it a big gap?
There's a lot of methods of trying to calculate what that gap is, and I try and avoid it because we only have to look at the price to know what the gap is. And so here in Perth at the moment, they've seen 30% increase in house prices over the last couple of years. Rental price vacancies at very, very low levels. So we know that there is enormous pent-up demand there, and that gap is quite significant. And so even as we start to build more homes than what we need, it's going to take probably 5 to 10 years of supply exceeding the growth in demand before we would see a point where rental price vacancies would be above 3%. And I'm going to define that as what success looks like from the supply and demand equation. When we get rental vacancies back above 3%, that's the point at which renters have some market power. Investors are going to have to demonstrate to renters that they are good landlords in order to attract good tenants. And so that's that equity problem that we have that's a consequence of this shortage of housing stock is probably best measured through rental vacancy rates. And so I think that knowing that the next 5 years we're going to see population exceed demand exceed supply, if in the next following 5 years through to 2035 we can exceed that, then that might be the point at which we can start to find some balance in the market.
So my ears are pricking up here as an investor that might be listening to this podcast, and I'm sort of thinking, could be a good time to buy an investment property because, there's a real shortage of properties. Vacancies are so low. Honestly, I've never seen in my career over 30 years, the vacancy rate's so low the last couple of years since COVID. It's been remarkable. And so I've been able to put up the rents on all my properties. But we've seen average household sizes. I think it's around about 2.5 per household. Is that trending up or down? And talk to me about the massive rise of single-person households and what impact that's going to have on the industry.
So that average number of people per home, demand for housing is a product of population growth and average people per home. What we can see is that number is being it's not where people would like it to be. They're forced to live with more people than what they would like. And we saw that during the pandemic. Population growth went to zero and demand for housing continued to escalate as they wanted to live with fewer and fewer people. Now, that is a product of an increase in wealth. And we can see that from looking at Japan. Average density now in Japan is 1.8. If we look at apartments in Australia, the average number of people in an apartment is probably closer to 1.6, but is tracking around 1.8. If given the opportunity, if given enough homes, average density in a two-bedroom apartment is probably 1.6 people. And so that is that dynamic. Also, when we look at Australia, we can see that Adelaide, for example, that had almost no population growth from 1986 through to about 2020, that they still built 10,000 new homes per year because as wealth rose, people wanted fewer people per house. And so it isn't as simple as saying our population grew by 260,000 people, therefore we need 100,000 homes. And in that cycle where population went to zero for almost 2 years, we still built 220,000 homes per year every year. And so if we sustained zero population growth for a decade, we would probably still be building 120 to 150,000 homes per year, simply to accommodate knockdown rebuilds and the increase in wealth.
Interesting. So it's giving people choice. Yeah. Okay. So you've mentioned that we're probably going to fall about 20% short of the 1.2 million target. So that's 240, 250,000. And I appreciated your comments in my report that I put out the other day. I actually think personally it's going to be more like 300 to 350. That's just my view, but that's just my assessment. But if we continue, whatever the number is, right, if we continue to underbuild, what's the implication for property prices for the next decade, not just 5 years? What's it going to do?
Yeah, so then we track into what's the public going to do to respond, and that's what we're seeing playing out politically and in the public domain at the moment. You brought up investors, and is it a good time to build? And I'm concerned that what we're going to see through the course of 2026 is a little like what we saw in 2019, the last time that we had this conversation about net gearing capital gains taxes. It caused investors to pause their decision, particularly to build new. And investors at the moment are building 40%, almost half of all new homes built in Australia commenced by investors. And so if they do that, then that does simply make the problem worse. I'm hopeful that even if there are changes announced during this year's budget, and the government is acutely aware that increasing capital gains tax will lead to fewer new homes being built. And so what if they decide to solve the intergenerational equity problem by taxing investors more, then what are they going to do to encourage new home building? And there are a number of options there for them. Certainly accelerated depreciation is one. I think that gets forgotten about quite regularly. And of course, is simply just removing the GST off new home building until a point at which we build 1.2 million homes will be another reasonably simple but very effective initiative that if you consider housing to be essential like food, then why does it incur the GST?
I think you raise a really good point. We're sort of jumping ahead to politics, but I get really frustrated when I see politicians fueling the demand side of the equation. You know, the 5% deposit scheme, you know, great if you're a first home buyer, love it, right? But it's just fueling the demand side. I never got anything when I bought my first home. I scrimped and saved and got my first home because I worked bloody hard, did 2 jobs, right? And now we're dealing out dollars to get votes, right? But, you know, what are we doing? There's nothing I see at the moment to incentivize private individuals to invest in the property market. Like, yes, there's a capital gains tax discount, but that's justifiable. So what's your view on you know, what's going to happen here?
Look, I'm concerned that the most likely scenario is going to be something closer to 33% discount rate and a cap on the number of negatively geared properties households can earn. Now, in the medium term, in the short term, yes, that'll have an impact. But by the medium term, the impact will be negligible because, of course, that just constrains supply of new, forces established prices higher, and investor activity will continue to dominate the market. And at the same time, we also have the macroprudential restrictions, which have been wound up over the course of the past or since the GFC. And they increasingly make it more expensive for banks to lend to first-home buyers and have reduced competition amongst banks, unpicked a lot of Keating's legacy there in terms of banking reforms from the 90s. And unfortunately make it harder for first-home buyers to keep entering. So even if they make those changes, we're not going to see a material change to ongoing established house price growth as a consequence of demand exceeding supply and ongoing acute rental shortages. We could see a situation like we have seen in Victoria where taxes on investors have caused a short-term increase in turnover of properties and obscure those underlying supply and demand equations by creating an increased volume of transactions. But once we get beyond the next election, those underlying market dynamics of population growing faster than the supply of housing will persist.
Yeah, okay. So you mentioned, I just want to talk about the rental market briefly, Tim. So I guess what are the key consequences of, you know, continual structural shortage showing up in the rental market? Are we going to continue to see, you know, vacancy rates sub 2%? What's going to be the long term over the next 5 years? What's the consequence here?
Yeah, it's very difficult in the next 5 years to see rental vacancies being back above 3%. It's going to take longer than 5 years to achieve that outcome. Short of unemployment rising above 7.5%, and that's certainly not an expectation. I think unemployment is going to remain low to very low for quite a number of years yet. So rental vacancies. I think one of the challenges for an investor, and certainly a couple of years ago when I had a look at the Perth market here, and we could see that there was just about to be a house price increase, it was very difficult to get a real estate agent to call you back to properties being listed for 5 days and discovering that it's the shortest period of time it takes them to get a property onto the website and take it down again. And I attempted in 2022 to buy a property here and couldn't find anybody to take my money. So I suspect the market, whilst that dynamic is going to persist, the other side, the regulatory equation side, where governments are going to attempt to restore equity through regulation, will be something that adds to the cost side of things. And of course, they're not addressing the underlying problem there of the supply and demand equation. We will see more of those policies, such as being considered in Victoria at the moment as they head into their state election, and what we've seen in the ACT of caps on rental price growth and on tenant management.
So I want to talk a bit about building, I guess, and financial viability of projects. Like, a lot of projects simply aren't getting out of the ground at the moment. What does the feasibility equation need to look like today for developers to actually get something going?
Yeah, so the core issue there is around the price of land. Whether we're talking about greenfields or brownfields, it's the same topic. And we keep talking about who pays to make water flow uphill. And if we look at, say, Western Sydney at the moment, a typical new house and land package there might come in at 1.5 million. Your average Australian borrower can borrow, interest rates going up at the moment, can borrow about 875,000. So that really leaves building a new home in Western Sydney to wealthier individuals. And if you can afford 1.5 million for a new house and land package, Wilton is probably not the suburb that you're looking to live in. So the cost of building everywhere in the country is roughly the same. Perth's building double brick, Sydney's two-storey with lightweight cladding and the upper deck. So different building methods, but the cost of a 4+2+2 is pretty much the same everywhere in the country. It is the price of land, shovel-ready land, that is the difference. And so we are seeing those relatively cheap markets for land, being Perth and Adelaide, both have seen a 30 to 50% increase in the cost of land over the past 12 months, and that's going to see that appeal of those two markets from a new building perspective erode fairly quickly. And unless governments can find a way of funding that infrastructure, then the same barriers that exist in Sydney and Melbourne will persist in other jurisdictions as well. And to put it in an anecdotal terms, in the 1980s, the supply of infrastructure to new development was paid for out of consolidated revenue, either by the Department of Main Works or whichever government agency was responsible for building sewers and roads and the likes. By the 1990s, we moved to a user pays model. And from the year 2000 onwards, we moved to taxing the provision of that infrastructure. And now in New South Wales, the person that buys that first block of land has to pay for 100% of the infrastructure upfront. They have to pay for the maintenance of that infrastructure in perpetuity upfront. They have to pay for the upgrade to infrastructure for downstream users upfront, pay for the maintenance of that infrastructure upfront, as well as paying for parks, transport, other services that they don't have access to upfront. And then they're taxed on that at multiple levels through development fees, developer charges, stamp duty, GST, and stamp duty again. And so that is moving those costs back off upfront charges and spreading those over established homes, the other 11 million Australian households, is politically very difficult. And that's the decision that politicians at all three tiers of government have to make if we're to solve this housing shortage.
Yeah, because they're very substantial. So apart from infrastructure charges, like the actual construction costs, have they, obviously during COVID, they went up 40 to 50% from where they were pre-COVID. You know, I mean, the cost of a container ship went up from 22,000 to 20,000 for a period of time. But are the construction costs now generally stabilised and just sort of moving sort of pretty close to inflation, or are the margins still too tight for many projects?
Right at the moment, we are seeing construction costs rise at a little bit faster than CPI. But if we look over the past 25 years, the cost of land rose a little over 500%. The cost of labour, cost of materials rose at about 150 to 200%. So the key constraint is land. During the pandemic, yes, land, labour, materials all rose quite quickly. What we expect for the next 5 years is that the cost of construction is going to continue to rise at a rate a little above CPI, and that's because of ongoing energy price challenges and the rise in the cost of labour. I'm not sure that the cost of transport fuels with what we're seeing coming out of Iran at the moment is going to be the long and lingering impact. I think that we have other domestic factors that are going to be a bigger driver than that fuel cost component. The other component there in the cost of construction is labour, and we're seeing skilled labour prices rise about 50% faster than average wages across the rest of the economy. And that's going to continue for a number of years yet as well. We have seen 10,000 skilled migrants come into the industry over the past 12 months, a doubling of what it was a couple of years ago.
We appreciate you tuning in to the Property Buyer Podcast, and I hope that you're finding our expert interviews helpful. So that we can keep providing this information and growing our audience, we rely on word-of-mouth recommendations. If you found this information useful, could I please ask you to share this podcast with your friends, family and colleagues, and ask them to subscribe to the Property Buyer Podcast. It would be a big help, and we'd be very grateful for your support. Thanks once again for sharing the links. And now, let's get back to the podcast.
So yes, we are expecting to see wages continue to rise in the skilled trades faster than what they are in the rest of the economy. But we will see some structural changes as particularly the volume builders move to increase prefabrication, different construction methods. Yep. But on the other side of the equation, we're seeing an incredibly strong level of renovation work underway at the moment, both in terms of value and in terms of volume. And it is the more cashed up homeowner that is undertaking renovation work at the moment. We saw the average age of a kitchen renovation go from about 32 years down to about 16 years during the pandemic. So very rapid turnover of kitchens, and the size and expenditure increase. It's gone back out now to 22 years. It's probably going to hold at that point. So people are spending more time at home. They're renovating their house more. But because particularly those buyers that owned a home in 2020 have sustained their job, they've seen a doubling in house prices over the past 5 years. They can't find the home they want to move to because there is that shortage of land. And so they are doing substantial renovations in order to achieve adjustments to their lifestyle and their living conditions. And that's a challenge from the new home builders' perspective, because the renovation market pays skilled trades 30 to 50% higher because of the higher skill level required. And it means that we're not going to see access to skilled trades come from that renovation side of things. And as we head through to Brisbane 2032 and the large volume of infrastructure projects the government has underway for very good reasons, strong population growth requires infrastructure, we are going to have competition from government infrastructure projects for unskilled, semi-skilled and skilled labour as well. So as an anecdotal example there, we could see the day that Western Sydney Airport shifted to engaging plasterers, because on one fixed day in 2023, we saw the price of skilled plasterers increase 25% for every plasterer in New South Wales, and 2 weeks later it spread to every plasterer across the country as they just drew in a large volume of skilled trades. And so likewise, some storm damage that happened on the Gold Coast a couple of years ago, it took 2 weeks for a rise in the price of roof plumbers in Queensland to flow through to an increase in price of roof plumbers in Melbourne. It's not that the skilled trades shifted, it's just that the price went up.
Got it. Okay. So if we look at the types of construction, apartment construction, townhouse construction or detached housing, I've got a development division and we're seeing that the cost of building apartments is a lot higher. Is that what you're seeing? Is that the most difficult sort of type of development to stack up compared to townhouses and detached housing?
Yeah, high-rise has certainly been very problematic, and I think that there's two things. It's not only that rise in the cost of steel, labour and cement. There is also that consequence of building far fewer that learning by doing, the explosion in time frame during the pandemic that caused a lot of pain for builders. Can we get to completion within 3 years for a high rise? And there's not enough of them going on at the moment to prove that it can be done. But I think once we get started, we will see some of those costs come down as completion times get shorter. We can see it in detached that build times went from 6 months to 12 months. We're now back to about 8 months. And I suspect that we'll see something similar in high-rise construction. In terms of which type of building is going to win out, that is a government decision. And it is a really unfortunate consequence that the market doesn't get to decide whether they want high-rise, medium or low-rise.
I reckon there's a gap in the market. Like, again, just putting on my developer/investor hat, all these new LMR zones, particularly around Sydney and Melbourne, for example, close to shops, transport hubs, within 800 metres, there's a real opportunity to buy townhouse sites and do them cost effectively because they don't cost as much, particularly if you can do on-grade parking rather than basement parking. There's a really good opportunity to make good coin in developing, and that fits to what they call the missing middle, right? There's a lot of people who want to live in the local area, move out of a house, but they don't want to move into an apartment, and the townhouse provides a good option. Would you agree that's like, particularly in the next 5 years, a really good opportunity for some developers to get into?
Absolutely, and it also depends on which city you're looking at. Melbourne has been far more effective at delivering that missing middle dynamic than anywhere else in the country, and they did clock into that problem. I remember hearing the head planner in Victoria mention that, wanting to be more like Barcelona in a meeting we had with them in 2019, and they've been successful at that. The builders that service that market, they've certainly changed the method of construction. To build 12 to 16, 2 to 3 story walk-ups in a matter of 12 to 16 weeks is a remarkable turnaround. So it is a very efficient product at delivering a volume of housing. In other jurisdictions, the planning regime just won't permit that to stack up. Here in Perth today, Perth's probably a couple of years away from that missing middle story starting to see an increase in medium density housing because the value of the existing medium density stock isn't high enough to justify the new build and the rise in the cost of new build that occurred through the pandemic.
Okay, you talked a bit about labour shortages. I've just got another question about that. Like, how serious is the labour shortage in the construction industry? We hear about it in Brisbane where, a lot of workers are being pulled into the Olympics and really causing problems. Like, tell us about labour shortages, where they're most acute in particular cities or particular sectors. Tell us how that's going to play out.
Well, Brisbane is certainly going to be the most acute labour shortage. They report demand for 25,000 security guards during the course of the Olympics, and we don't have that many security guards in Australia, apparently. So, and then we can see the highest level of apartment building in the country was actually in 2016, which is when the Queensland government built the Commonwealth Games Village on the Gold Coast. And so we know that's coming. And so stadiums, they're all the same skilled work set that is going to be in demand. At the other end of the spectrum, Western Sydney and to some extent the growth corridors around Melbourne, then pushing workers out probably isn't the right turn of phrase, but they probably have an adequate supply of skilled trades. We are seeing net overseas migration here in Western Australia is significantly stronger than anywhere else in the country, and maybe because the state government is offering $10,000 incentives to individuals that relocate here, maybe a lower cost of entering the housing market. But whatever the factor is, there are now pockets of activity around, or pockets of labour. There are now pockets of the labour force where there is an adequate supply as a consequence of the slowdown in particularly detached home building. And Western Sydney is one of those.
Yep, got it. Okay. Tell me a bit about, do you think skilled migration is going to help solve the housing problem, or not really? It's like we're not going to be able to import enough labour to help our construction industry.
We've already drawn most of the skilled labour we can out of New Zealand, and that happened fairly quickly. And we are bringing in around about 10,000 skilled migrants from overseas. There are a small number of builders that have set up overseas training and assessment facilities, and it is very expensive to do. But I do think that we're going to see a growth in the importation of skilled migration. I think the government is well aware that it plays a very important role. The industry has always been non-English speaking on building sites, and you can, Perth again in 2014 cycle, it was very common to see Irish rugby jerseys on building sites around Perth. And that was because whilst this market was booming, a market that we recognise the skills of being Ireland was in a recession. It's a little bit of a challenge we have at the moment, that those regions that we do traditionally draw workers from, there isn't a region that's pushing those skilled workforce out at the moment. So that does make it increasingly expensive to do. The exception, of course, being New Zealand, and unfortunately the pool of labour there, I think we've already exhausted.
Okay. I just want to sort of wrap up with a few more questions on policy and planning, if I may, Tim. So from an industry perspective, what do you think, just to summarise, what are the biggest policy barriers to increasing supply? Just to kind of shoot off the hip, what are the key things you could rattle off for us?
The first is doing away with the foreign investor taxes. They are the worst own goal housing policy, taxing institutional banks that have never been to Australia, that used to build a large volume of apartments and didn't live here. They're policies that have raised negligible revenue. Changing who pays... Sorry, I'll go again. Allowing competition for the provision of building new infrastructure for new development sites, changing who has to pay and leading to a much greater share of the cost being incurred upfront by government rather than passing that on. Now, probably the two easy wins. 18 months ago, we saw the South Australian government announce a policy of a third, meaning infrastructure, a third would be paid for by existing water users, a third paid for by consolidated revenue, and a third paid for by developers, which effectively means paid for by the first buyer of that block of land. And if we could see other jurisdictions move to that model, then we would certainly unlock a significant volume of new greenfields and brownfields land. I think that once we get past those barriers to investment, foreign investment is the easy one, and we get past those barriers to infrastructure build, and that is both competition for the provision and determining who pays for it, then the other issues of labour shortages, material prices, energy costs, they all become rather secondary issues as that cost of new land supply falls. And we have seen a reduction in land prices in some markets across the country, albeit by about $20,000 or $30,000. It's a very small amount when you're looking at $1 million for a 500 metre square block of land. But it has happened, and I'm hopeful that by the time we get to 2030, we'll be looking at new greenfields land at prices that are similar to what we're paying at the moment.
It's really interesting you mentioned foreign buying policy is the number one thing. And I think this is almost a controversial topic I'd like to raise, because so many people think that, Chinese buyers, foreign buyers are the pariah, right? They should be banned. In fact, they are our saviour. I'll go out on a limb here. And in fact, if we look at, I haven't got the data in front of me, but I remember between, say, 2013, 14, right through to 2019, all those buyers would buy off the plan, and that made projects viable. Now, had they not been there, we would be in a worse situation. But, it's politically, expedient to sort of point the finger at these foreign buyers taking away our properties. Well, they wouldn't have got built in the first place had the demand not been there. What would you say?
That's right. It's the politicians' creed. Blame foreigners, blame investors, blame foreign investors. That's the routine. Unfortunately, 1 in 10 detached homes are built by a Japanese-owned builder. More than half of those apartments that built in the past were built by foreign investors, most of whom didn't live here. And now what they've done of taxing foreign investors, of those overseas international students that are coming to Australia that did historically build an apartment to live in, because, of course, foreigners can't buy established homes in Australia, and they haven't been able to do so since Gough Whitlam introduced legislation in 1975. So those international students that used to build houses now can't build them because the government won't allow them to build new. And so instead they rent an existing apartment, genuinely increasing demand for housing without increasing supply and without paying more tax. It's a very perverse policy.
Absolutely. There's so many unintended consequences. There we go.
The only upside is that I think state governments have worked that out. We have workaround rules in every region to ensure that Australian builders don't pay foreign investor surcharges, that institutional investors can buy land. We have this very perverse one at the moment where Australian superannuation companies can't build homes in Australia, restricted from building homes in Australia because they use overseas investment tools in order to build homes in Australia, which means even your money paid into Australian superannuation companies is incurring foreign investment stamp duty surcharges to build apartment complexes in Australia.
Crazy.
It's bizarre.
So I just want to ask you a location question around where do you think in Australia the planning system is most out of step with the housing needs? Like in terms of locations, where does the planning rules need to be dramatically improved to increase supply?
Well, the evidence is Sydney, $1.5 million now, $500,000 more expensive to build a new house and land package in Sydney than it is in Melbourne.
Yeah, okay.
Melbourne arguably is one of the better, and we've seen some reforms come through. And I am quite hopeful that Sydney is going to crack some of those major barriers. But the two best planning regimes in the country are Adelaide, Perth, and arguably Canberra as well. And without going through the individual policies, I think the reason that we have that is that Canberra, Adelaide, Perth are the city-states. The state government has much better, I don't want to say control, but ability to work with local councils to determine where the infrastructure is going to be built and where their growth corridors are. I think arguably the worst two could be what's happened in the southeast corner of Queensland over the past 5 years, where 3 local councils do appear to hold a lot of political power over a state government, and the ability of that state government and those 3 local councils to work together, I think, is going to determine how successful the Queensland Olympics are going to be.
Got it. Tim, if you were the Federal Minister for Housing, if I could anoint you with a sword right now to say, Tim Reardon, you are now the Minister for Housing and you can have one wish, what would be your one major reform that you think would make the biggest difference to improve housing shortages in Australia?
Move the GST.
On new housing?
Yes, so GST only applies to new housing. So yes, remove the GST until we build 1.2 million homes, and then allow them, state governments, to introduce that again when they do hit their volume of homes to meet that target. Beautiful. At that point, we would see them very, very focused on lowering their other costs in order to deliver the supply, because of course, housing is enormously revenue positive. $200,000 in direct tax revenue from every new home built, and an additional $300,000 in indirect taxes. So if they want to raise more revenue, just build more homes.
I mean, that'd be a 10% kicker on the bottom line for any developer, which would make things a lot more viable. So really good.
You would see a lot of projects get off the ground quickly.
And Tim, last question for you. What's the best piece of investment advice that you personally have received and maybe you'd like to share with our audience today?
Well, I think that's everything that Warren Buffett has said is the best piece of it. It's not about timing the market; it's about time in the market. I think that's very true. Yeah. I think from a housing perspective too, it is about buying houses where you know the market. I think that is always a safe bet. I'll go with a third one: don't sell houses.
Love it. Hold it for the long term. I've been chatting with Tim Reardon, Chief Economist of the Housing Industry Association. Tim, thank you so much for your insights today. That's been incredibly helpful. We really appreciate your time.
Pleasure.
Thanks again. Thanks, everybody, for listening to another edition of the Property Buyer Podcast. I'm Rich Harvey. Please share and like our podcast, and we look forward to seeing you on another episode again very soon. Bye for now.
Thanks for being with us on another Property Buyer Podcast. If you have a question you'd like to ask, please click on the SpeakPipe link and we'll answer this during the next episode. If you're looking to buy a residential or commercial property in the near future and would like to get the added advantage of having a buyer's advocate on your side, then please reach out to my team today and send us your inquiry and we'd be delighted to help. Please visit our website at propertybuyer.com.au where you can stay updated with all my latest market updates, weekly blogs and live suburb profiles to help you make better property decisions. We look forward to connecting with you again on the next Property Buyer Podcast.